everybody, Mike Nelson with efficientlending.net. First and foremost, as always, thanks for connecting with me on the web, my blog, my corporate website. I always appreciate it when people spend some time with me online checking out my content. All right, a topic for today, and let me kill the phone, it's ringing. A topic for today, one that I'm actually really excited to get out, is buyers and agents don't make these 3 mistakes in a growing market. And I hope this information is helpful for you. And as always, feel free to call me, contact me any way you want. We can talk about it in greater detail. All right, let's get right into it. Mistake number 1, do not underestimate the buyer's strength. Here is the real important concept on a pre-approval or a refinance even, is the pre-approval is a single point in time. It's for today. And look, mortgages are kind of complex and they move and they're fluid, so think about it. A buyer who is not qualified today can easily become a qualified borrower tomorrow. When I say tomorrow, it's metaphor. I'm saying some point down range. So never underestimate that. The market's rising and it's growing. And so, I look at all these pre-approvals as a journey, something that we're going to go through in time. So if you're not qualified today, you are certainly going to be qualified tomorrow if we go down the right path. The second piece, and I see this mistake being made by, candidly, real estate agents and buyers a lot. You could already own a primary residence and you could have a lot of equity in that home. Your income could have gone up recently in the past couple years. So the well-qualified buyer today can also get into things like investment property, second homes, things of that nature. And again, that's a journey as well. So one of the big mistakes I see being made is understand pre-approval and the buyer strength is not a single point in time. It's a relationship that goes throughout time, months, years, even in certain cases. And it's a journey. So you want to go on that journey with the right agent, the right lender. You want to go on it together. So that's mistake number 1. I think people's buying power is actually underestimated. Mistake number 2, do not listen to media hype. Let me give you a great example. Open up the Wall Street Journal, which is a fantastic, reputable news source. I'm not saying it's not. Open up the Wall Street Journal, and one of the articles was saying prices are rising, market's going up so fast that nobody can, that people can't afford homes any longer. Same edition, same paper, there was an article saying equity is at like the highest point next X number of years, and equity and risen in the home. Well, unless you're a sophisticated lender or financial person, you may not realize that's doublespeak. If you have got a rise in equity, then by definition you have assets that can be leveraged into real estate. You can buy, go into the stock market. There's a bunch of things you can do. So be very careful about listening to media hype. Get good quality information that's more pragmatic and measured. And in part of that, you got to assemble the right team to get that information. The right team is a quality real estate agent. It's a quality lender, and it's somebody who can give you good financial advice. The second piece is, guys, the sub 4% 30-year fixed mortgage does not exist anymore. It's gone, and I think that's a good thing. Topic for a different day. Call me if you want me to blow that up a little bit, but I generally think that's a good thing, and I think it represents opportunity. But if you just go pay a ton of money in points to get a super low interest rate, that's just market hype. The second thing is this. Don't just default to a 30-year fixed mortgage. Products matter. Interest rates are rising. Guys, there are products that are designed to handle a rise in interest rates, okay? There are products that are designed for low down payment, renovation. There are great products designed for investors. So my point is this: if you just read the market hype and read one article and get the impression that, no, I'm not going to get into the market, you're negating the fact that the right team around you can advise you on the products that can accommodate appropriately increased prices requiring down payment that impacts down payment, or that can leverage the well-qualified buyer who already owns property and they want to enter as an investor. These products can target and handle the change in the market dynamic that is in fact occurring right now. Mortgage products matter in a marketplace. And the biggest mistake is do not default into a 30-year fixed mortgage. Let me give you guys a great example. I'm dealing with a potential borrower, well-qualified borrower, a lot of income, and they may see, we worked together for a month or two on acquiring a property. And at the end of the day, they decided, you know what? I believe the market is at the peak. I don't want to invest in a property right now because I'm afraid the market's going to go down and I'm going to lose my investment in the property. Great, wonderful. That's the advice they got. They talked to somebody who owned multiple properties and was then selling the properties that they owned, and so my buyer felt that was the right decision. Guys, here is the problem. They rent. They don't own a primary residence. So they negated the entire benefit of the tax advantage of writing off mortgage insurance and the market risk that they perceived as being at the height of the real estate market. Couple things. Number one, we have a mortgage product called a down payment protection plan that can provide insurance against a declining market. So that option was there that they could have thought about. The other thing is they didn't consult a CPA to quantify the benefits of writing off mortgage insurance relative to the insurance plan, relative to the financial benefits of owning a primary residence versus renting. And so they were in the market hype, and they're going to end up probably costing themselves money in the long run because they rent versus owning in a home. So that's my point. Mortgage products matter, and a good financial team around you matters, and those resources are available for you. So make sure you don't let the media hype just sway you in one direction. All right, and here's number 3, and this will be my last mistake of the 3, obviously, misuse of technology, and this is important. Listen, guys, mortgages are complex. They require math to be done. Do not default into a 30-year mortgage unless you've done the analysis of the cost of that mortgage. The most expensive mortgage, almost always, by far, is a 30-year fixed mortgage, okay? So here is how technology works. The wrong way to use technology is pull out your smartphone, go online, fill out a couple pieces of information, take a snapshot of a bank statement, upload it, and all of a sudden you're approved for a 30-year fixed loan. That's not how you want to use technology. Here's how you do want to use technology. Look, my company embraces, American Financial Network, we embrace technology. In fact, we're pretty far ahead of the game, but even this weekend we're rolling out a revamped, more efficient technology suite that's going to go to our buyers, our customers. What does that do? Well, think about it. Let's just do some simple math here. And if a loan has on average of 100 pages of documents, I don't know what the average is, but I think based on my experience, that's probably pretty conservative. American Financial Network, AFN, will close around 17,000 plus loans this year. So think about it, guys. That's over 1.7 million documents that we as loan officers, processors, closers, funders, underwriters, we read them. And guess what, guys? We actually read them all if we have to. All right. So here's the point. We have to find efficient ways to collect those documents, get the pertinent information out of them, and then do the required math to understand what the best mortgage product for you, the buyer, is, okay? So technology that makes us efficient in collecting those documents saves me, the loan officer, a lot of time. If I can save that time, I then can read the documents and I can do the math on several different mortgage products that exist that may be to the buyer's benefit. So the proper use of technology is leverage the online efficiencies, leverage the document collection that creates additional time for the buyer, for the real estate agent, and for the loan officer and the financial team supporting that buyer so that we can make the best recommendation on the right product that will make the best sense for downstream. And here's how this ties in to really the other 2 mistakes 1 and 2. If you're a first-time home buyer, you get into the market and we get you into the right product, which may be 25-year fixed or a first-time home buyer product, might be a USDA loan, might be a VA loan, and you amass the most amount of equity or ownership in that home over the quickest period of time, guess what? You're going to be an investor or a second homeowner downstream if you so choose. If we don't use the right technology and choose the right mortgage product for you, then it's going to be harder for you to acquire wealth in that home downstream. That's the point. That's what we really want to get out as our primary message. Look, if you're a real estate agent, I'm hearing from real estate agents all over the place right now that inventories are short, it's too hard to get buyers in, and et cetera. Look, the market has changed. Inventories are absolutely tight right now. But here's the situation. If we start focusing away from that listing side so much and start looking at the buy side, and you realize you're a career real estate agent, you've got a whole database of relationships, customers, buyers, people that have worked long and hard on their credit, or they own homes and they have increased equity in the home. If you realize that we have all those people, we don't fall prey to those three mistakes, guess what? Let's assemble the right financial team, talk to those potential buyers, and I think we're going to start to see the number of transactions increase, and we'll also see just really a healthy and vibrant real estate market. Look, those are my top 3 mistakes. I hope they helped. I always want to chat with people and continue this dialogue. I personally enjoy it, and I think there's just a great amount of products, information, wonderful financial teams and real estate agents, financial advisors and lenders, and we certainly want to be one of those. So we'd love to hear from you. Contact me anytime, and I hope you have a great week.